Hey everybody, it's Crypto the WonderDog here with Dean and Charlie. Man, Charlie, we have had some crazy stuff happen overnight. We've run into a few news articles. What's been happening in your world?
Well, the thing that struck me is reading that a Canadian pension fund is going to be investing or getting involved with cryptocurrencies. That astonished me. I mean, we're talking about some of the biggest and most important financial institutions, which are pension funds, which are supposedly, theoretically, some of the best managed.
OMERS, right?
Pardon me?
OMERS. That's the one we were talking about. Right?
Yep.
Yeah.
Precisely. Exactly. And that. Well, I guess that underscores the fact that they are supposed to do their due diligence about whatever it is that they invest in.
Yeah.
So again, there's like we talked about the other day regarding Venezuela and Starbucks. They see something legitimate about the cryptocurrency technology, and they're going to be investing in it. You would think that if anybody would have the capacity to talk to whoever they need to prior to making their investments, it would be a pension fund.
Yeah.
So that struck me. I guess you also found out something else about. You were talking also about a credit card company.
Yeah.
Was going to go into that for me.
Okay. Well, let's see here. Where did I see that? Okay, so Lambo Dreams. It's a website that talks about crypto and stuff, and that popped up on one of my Twitter feeds. Guy tried to use his Discover card, and it actually blocked him from buying a crypto coin. And it said local cryptocurrency investor Jason Kim voiced frustration Sunday after his attempt to purchase Bitcoin with his Discover card. And it was denied. We've banned all cryptocurrency purchases in order to protect our customers' financial interests, said Anne Latronis, Discover Card spokeswoman. We are absolutely committed to helping Discover Card holders maintain smart financial habits. And it goes on here to show that Mr. Kim currently pays Discover 27% interest rate, which tells me that we're looking out for his interest so he can pay us more money.
Yeah, if somebody was going to be looking out for his interest, they'd say, "Why are you so stupid to purchase anything at 27% a year?" Or, that interest rate is almost usurious.
She should be telling him, "Get rid of this effing card."
That would be the best advice.
Let me give some advice. Get rid of our card. They have an annual $50 account maintenance fee. So not only is he paying interest to the people who run the card, but he's also paying them another $50 to sit in their chair, drink a cup of coffee, and look at his account online and go, "Yep, let's tack on another 27%."
I got to say something. Well, I'll tell you what. Which company is this? This is Discovery?
This is Discover.
Oh, Discover, Discover. Well, I'm pretty sure after this podcast, they're not going to be one of our sponsors. But that's
Well, hope they don't discover our channel.
But that's perfectly fine. It's okay. They can go ahead and go
I'm sure I'm sure they're not going to crush us. And we're not poking anything that's not true. I mean, this is coming straight from Lambo Dreams. I don't know how reliable his sources are, but this says it came from Mr. Kim. January 28th, Lambo Dreams. So, account maintenance fee, 5% balance transfer fee, a $25 over limit fee, a $10 foreign transaction fee, a $10 cash advance fee, and a $20 late payment fee. So the less money that you have, the more money you're going to pay.
Right. Well, the thing is, it kind of works the same way with student loans. They're making more money in many cases when the student loans go default. and they can start charging all sorts of fees and penalties. And that's unfortunately a part of the business model for a lot of banks and a lot of companies, such as the lenders for for student loans.
Yeah.
It's just one of the more unfortunate and criminal, I don't know, criminal, but one of the most enraging things about what's going on with the economy, with financialization of the economy. But think about this. You have to wonder why they would, given all that they're doing, why they would care what Mr. Kim does with his money. I mean, he's borrowing their money. He agrees, and you've already made the agreement that you're going to lend him this kind, or give him these kinds of loans.
Yeah.
Short-term loans. What do you care what he puts it in?
Seriously. Yeah. I mean, as long as he doesn't default on his payments and he keeps up a good standing with the card, it's none of their damn business what he spends his money on.
Yeah. I mean, if he wants to go down to a strip club and,
they're definitely not going to. Yeah. I mean, he's really getting nothing out of that other than a big eye full of boobies. But, he's, what's he getting out of that? Nothing. So,
yeah, right. Nothing. But somehow you're not going to stop that transaction.
No.
Let's say he wants to get 40-inch rooms for his Yugo or Kia. You're not going to stop that.
No.
So, all of a sudden now, when it comes to cryptos, you become the pastor. You become somehow the hall monitor.
Yeah.
I guess Discover is wearing that little cord around their neck or that little sash, and they're sitting there telling you move along, move along. Why all of a sudden is it Bitcoin that has gotten their I mean, he could probably borrow money to go get involved in penny stocks.
Absolutely.
And so, and that's probably as far or as much of a scam as anything else out there. So why all of a sudden they found religion when it comes to cryptocurrencies?
Yeah. I'd be interested in finding out if they're going to have any. They have been looking at the crypto world, and maybe they're trying to find out a way that they could get their hands on something where it's a discover backed coin, or something like that, where they're going to have their own interest in it.
Or they basically, again, these are all suppositions we don't have. We're just talking. We're talking out loud, trying to figure out what the thinking is.
Yeah.
Because Facebook, and now this is a different sort of situation, but Facebook, as you posted last night, is banning cryptocurrency ads on Facebook. And again, it's primarily because they feel that, or their justification is that cryptocurrencies are a scam, and they're not truly a legitimate investment. So therefore, we're going to try and protect the general audience by not allowing these kinds of things to be on.
Yeah.
All
right.
I have a serious problem. Yes, everybody should do due diligence with everything that they do.
Absolutely, especially when it comes to their own money.
Yeah. And so, well, I can understand Facebook it's their company and it's their invention and their product. They can do whatever they want.
Yeah.
You have to keep wondering exactly what is it that you're trying to protect us from. I mean, not to say that there's not a legitimate reason to be protected, because like I said before, I'm still very, very suspicious and wary of cryptocurrencies. But nevertheless, there are a lot of other things out there that are probably just as injurious or just as problematic as cryptos.
Yeah, and once you start getting into it and you learn about it, then that's why I got into it and turned you onto it, because I thought it was a great idea, and I thought it was a wonderful opportunity to possibly make some money to retire on. And since many of us chose paths that didn't have a pension fund or a retirement plan. When you're independent contractor, that usually doesn't happen in your contract when you're working for some guy for 4 hours and he doesn't really put much into your retirement plan.
Yeah, well, the thing is, I have a retirement plan.
Oh.
My retirement plan is that I'm going to live to about 80, somewhere into my 90s, and work every single minute of that time.
That's what I'm doing too.
Just as I'm about ready to cash in, I'm going to keel over, and that's it. And that's my retirement plan.
Yep.
So I don't know what I'll be doing. We'll be making a softy serve and some softy ice cream.
Welcoming people at Walmart.
Yeah, or telling them to get the hell out. One or the other, I don't know. But
get off my lawn.
That's my plan.
Kids, get off my lawn.
I can do that for the neighborhood. I'll be the get off the phone guy. They can pay you to do that.
Oh man.
But
all right. So the United States Senate. That was another thing that I saw today. Trust nodes, trustnodes.com, bringing you tomorrow today. It's pretty funny. Anyway, 12 Wyoming representatives and senators have introduced a bill backed by Speaker of the House to exempt blockchain tokens from securities and money transmission laws. Representative Tyler Lindholm, a Republican member of the Wyoming House of Representatives, said Wyoming is stepping up to welcome the blockchain community with open arms before further adding, we view non-securities blockchain tokens as a new asset class that is neither money nor securities, and therefore believe existing money transmitter and securities regulations should not apply. What do you think?
Pretty much telling me that they're going to allow it's okay. We were talking again about penny stocks over the counter markets. In a way, they're basically saying, yeah, that's fine. It's going to be the Wild Wild West with cryptos. We're going to allow you to have really no oversight, no regulation, and therefore we're going to let them, supposedly the market rule. Now, the problem is that, and I'm not saying that there's a direct analogy between cryptos and over-the-counter penny stocks. Not saying that. But I'm saying that both of them, if this legislation is in fact put into law, they're going to be the same thing in the sense that there's not going to be any oversight. You don't know what that company is doing. You don't know the assets of the company because securities laws also require that they be audited by an outside auditor. Well, that's not going to be there. It's from what I'm gathering is that there's not going to be any way for you to verify the information that any of these cryptocurrency companies or promoters are distributing. So it's going to be back to the days prior to the Securities and Exchange Commission creation and oversight. So there's not going to be any. You can't if these things fall apart. Oh, by the way, there's another thing that's kind of like the same thing. Hedge funds. Hedge funds don't have any oversight as well. Or they didn't. But the point really is that there's going to be massive amounts of money. If people keep, and we've talked about, and you've talked about the market cap on many of these cryptocurrencies. Yeah. According to their market caps that they're releasing, there's a huge amount of money in circulation with Bitcoin or with cryptocurrencies.
Yeah.
None of that's regulated.
1% of the world's wealth is in cryptocurrencies.
Yeah, just think about that. Just think about the trillions of dollars just in the American, just in the American economy, and just a 1% or a small fraction of that is it's a remarkable amount of money. Now, yeah, extrapolate that to the rest of the world. You're talking about huge amounts of money that are going to be accumulating in these cryptocurrencies that are going to have the enormous amount of power, political and economic power, to do things that we won't be able to control or even have a chance to see, or they won't be transparent. I got a little problem with that. It should be something that should be part of the public debate, but is not, and that's more than troubling to me.
Yeah.
But then again, we talk about how there's got to be a connection. There's a reason why people are getting into now Bitcoin futures, according to investing.com today, right now at whatever time it is, 11:14 on the West Coast. Bitcoin futures are at $9,915. They're down 175, 1.73%. So you've had a significant drop. Now, we've talked about this off air quite a lot. How is it that we can have these headlines that are talking about pension funds and all these other companies or all these other entities getting involved in cryptocurrencies and somewhat ratifying the technology and at least the concept.
Yeah.
But how come it's not being reflected in the price? What's going on here that would create this kind of a disparity?
It's a mystery.
Well, yeah. To me, I'm not sure it's a mystery. I just don't understand it. It doesn't make sense. But then again, I take a look at the dollar, and the dollar now is at 89.10. It's up 0.06. But if you take a look, if we can put up a chart of the dollar and what it's been doing the last, several decades, it hasn't been stable at all. And I keep emphasizing the point time and again that the dollar is probably the best precursor and the best indicator of American health or the health of the American economy than anything else. I don't think it's a stock market, and I don't think it's a bond market. It's the value of the dollar. They're all predicated on what the dollar is going to do and where it's going to go. And there you go. So,
well, this is the index, U.S. dollar index, 43-year history chart. But this only goes up until December last month, and it was at 97. So I'm not sure what it is today or how to find that chart for this month.
80, yeah, it's 89. It's 89.
Okay, so
89.09.
Yeah. Okay, so we're like in the area right in here.
Yeah. Yeah.
So,
but going back to that historical chart, what I want you to take a look at, or everybody to take a look at, so you can see that it's already beginning to be very. Let's just say where we're at. Take a look at that volatility. Now, in 2016, in 2017, actually, it was hitting at 104. So now it's
103.
Come
yeah.
down. Yeah. So now it's down to 90, approximately 97, 89. I'm sorry. So it has fallen approximately, 15% in less than a year. Now, if you could take a look at the chart that we dug up a couple of.
Well, that was November. Last time it was at 89 was in November of 2014.
Yeah. Talk about volatility. This is supposed to be the U.S. dollar. This is supposed to be the currency and the mode of transmission. Excuse me, for the most powerful economy in the world.
Yeah.
It's supposed to be a safe haven. We grew up being told that the U.S. economy is the preeminent economy and the preeminent way of doing things in the world. It is the safe haven. It's a place where everybody wants to go because it's supposed to be a stable, prosperous, ever-growing standard of living. Well, if it's all true, then why is the dollar acting this particular way? Somehow people with, like pension funds with these enormous flows of money, because what this is reflecting is these massive flows of capital between countries, as part of the strength of the dollar. Because the dollar primarily is a comparison. It's an index, so it compares the dollar to the other currencies of the world, whatever is part of that ratio. So as those currencies get weaker, the dollar gets stronger. Now, think about why the dollar has been, in fact, got so strong the last few years and then it's fallen off. It's primarily because, in my opinion, what's been happening in Europe. Europe has been in serious economic trouble. I'm not sure if you've been following what happened in Greece or Southern Europe.
Oh, yeah.
But, yeah, they were collapsed. In huge trouble. And so they had major falls in standards of living. There was going to be cuts in people's, and the governments kept saying this, we're going to have to try and, we're going to have to cut your standard of living in order to pay off the debt that we've incurred, the national debt that we've incurred in some of our financial institutions as well. I don't want to get into why that happened, or because that'll be another 2 hours, 3 hour broadcast, and that's not appropriate. But what that told me is that a lot of the money was fleeing, and still was fleeing Europe, and going into the United States stock market, buying American treasuries or American sovereign debt, which is government debt. They were doing everything they could to get out and go to where they were told is a safe haven, and that was the dollar. But apparently, it's not working anymore, or to the extent that it did before. And if you can go back to the chart where we had that 43-year, where we could see over an extended period of time, the dollar has been very, very much a fluctuation. So in a sense, we've been told from the time, we were little kids about the strength of the overall American economy, but the dollar isn't showing that. The dollar doesn't necessarily reflect that. It's been, especially in the 80s, it has been remarkably unstable and volatile. And that's not what you're supposed to have if you have the preeminent. And besides something else, the United States dollar is the reserve currency of the world. Let me not forget to mention that. That means that most transactions have to if you, for instance, deal with oil. If the countries want to settle, if they want to, I don't know, China wants to deal with Saudi Arabia to buy oil, they have to use dollars. They can't use any other currency. They can't use their own currency. They have to settle in dollars. Well, what does that indicate? That indicates that gives the American dollar an inherent strength, because everybody needs to have it in order to be able to trade. But yet, even with that advantage, the dollar has been this unstable and been this unpredictable. Now go back. Now, how does this all work out with cryptocurrencies? I think a lot of people like you and me, just the average Joe, can take a look and see that their dollar simply or their paycheck doesn't go as far as it did 10 or 15 years ago. We were talking last time about going to movies and how back in the 80s, for $100, I could go to, for an entire month, I could go to a bunch of dinner and movie dates.
Oh,
now,
yeah.
if I live in cities like New York, Los Angeles, San Francisco, or I live in Orange County, $100 is going to be for one.
Yeah. One day. One day.
Yeah. And so it's going to be reflected in the dollar, in the value of the dollar. Now, if you can go scroll down and take a look at what happened during the 1980s, what does this have to do with everything? Well, Donald Trump came in and said, he's been pushing from the time that he took the presidency, that we have to get a brand new tax code. We have to redo taxes. Taxes are going to be the thing that's going to be this great stimulator of the American economy. It's going to bring back all this money. They're going to reinvest, all these very wealthy, or these huge corporate, or whatever it is, these places that have an enormous amount of money offshore. They're going to come back and they're going to invest and it's going to be it's going to be America again. It's going to be make America great again. And part of his package, which hasn't been as touted as much, is that he wants to deregulate. He does want to get away with, or he wants to, I guess one of the things he wants to attack are environmental protection and things like that. Well, okay, that's fine. I'm not here to argue the merits of that necessarily. What I'm asking you to do, or people to do, is take a look at what happened during the 1980s. You got the chart right at that point, where it shows what happened with the dollar.
Yeah. So we're from 1980. We started 1980 was at 90, from May 1980, and then we go all the way over here to 1989. March of 1989 is back to 93, and it went up to a high of 128.
Exactly.
In March of 85.
Now that was during the period of time. That was during the period of time of the Reagan Revolution. And that was when I was just coming of age, getting out of college, going to work. And Reagan kept saying the same thing. He kept saying much of what Donald Trump is saying today. Cut taxes. You got to give the wealthy an incentive to continue to invest in America. You got to get rid of these pesky regulations that are just shackling American businesses. You just have to get rid of these things, and everything is going to be great in America. And everything will be fine. There will be morning in America. That's what I remember. Well, George Bush Sr. saw this and called it voodoo economics. He was running for the Republican presidency. Eventually, he became vice president. But when he was contending for the presidency against Ronald Reagan, he listened to this and said, "No, this doesn't make any sense." It's what he called voodoo economics, which was, I think, a really good way of describing it, because it was so simple. It's just this huge economy premised with enormous, that had a variety of different industries, somehow is going to get out of its demise, or it's going to get out of its doldrums simply by doing a few tax cuts, get rid of a few regulations, and poof, everything's going to be fine again. And he said, no, that's not going to do it. It's, you just can't just spin a few phrases like in voodoo, doing a few incantations of some prayers and stir the pot, and everything's going to be great again. It's not going to be, sunshine, ever increasing standard of living, morning in America, the city on the hill, unicorns jumping over, rainbows, pooping skittles as they go. That's going to happen.
No.
That doesn't work. And guess what? Take a look at the dollar. It didn't. I mean, you infused the United States with an enormous amount of money, because when you deregulate it, and let's just stay with one thing, because this is something that I was familiar with, because I worked in real estate development when I first got out of college. And then I went to work for a CPA firm that's, I guess, 90% of its billings came from real estate. What happened was you deregulated the savings and loan industry. What people don't remember is that one of the reasons that the Reagan administration did so very well, or that initially did extremely well, was because financial institutions, but specifically S&Ls, were deregulated. Prior to all this, prior to deregulation, savings and loans could not compete with each other in terms of interest rates. And the reason was because the United States government, the taxpayer, was underwriting, was insuring this, were insuring deposits and ensuring the veracity of the company, of the savings and loan. So in order to mitigate debt, what the government told these institutions was, look, we're going to manage your balance sheet. You're only going to make home loans, and some of that money that, some of the investor money, you're going to put in government debt, sovereign debt. You can invest in T-bills, T-bonds, whatever. But they, specifically managed the balance sheet to get rid of the risk that happened that would come up if you started to compete with interest rates. So if one savings and loan said, hey, listen, to get you to come and deposit with them, we're going to offer more interest rate, a higher interest rate than the guy across the street. Well, yeah, that's great. The only problem is you're going to have to go out and look for much riskier investments. And the government said, no, we're not going to insure your risk, or that's too risky for us. We're not going to insure your speculation. Sorry, no. Well, when Reagan came in, they basically said, no, we're going to get rid of all that. You can go and invest, and you can speculate if you need to, but you're still going to have protection from the federal government. I mean, whenever you used to, and you can still go into banks now, and on the door there's going to be a sticker saying that there's a certain, if it's fine, I can't remember exactly anymore because I go with credit unions, but even they have a government oversight of their institution. Well, Reagan and his cohorts didn't get rid of that. The government was still, and the taxpayer was still on the hook and still insuring all of that risk. And that's kind of the voodoo economics that George Bush, the senior, was talking about. He said, you keep yapping about deregulation and free markets, while at the same time not getting rid of the insurance and the taxpayer responsibility to take care of these institutions. It's not true. And so, but given all of the talk and all of the, all of the hype, look at how much money was flowing into the United States, and the dollar got stronger and stronger. It was coming from all over the world. Savings and loans were taking brokered accounts, what we call hot money accounts, from Wall Street because, foreign countries or foreign entities wanted to get involved in this little, scheme. Who took advantage of that was Charles Keating with Lincoln Savings and Loan. He took a lot of hot money, brokered accounts money. But anyway. So great, everything went fine. You had a tax break that allowed you to get involved in real estate transactions and speculation, and it gave you a big capital. It allowed capital gains to be taxed at different rates, at lower rates than you would with earned income. It changed everything. But when all that changed, when they finally began to realize that, man, we're not going to get the returns that we thought we were going to get, look what happened to the dollar. It went from 130, from a high of about 130 down to, where it started. Mm-hmm. So my point is, there's nothing lasting in this. There's no, just because you want to say that we're going to cut taxes and, deregulate parts of the economy that we're going to have economic boom and good times forever. Well, given the 80s as an example, that just isn't true. It didn't work. It didn't give us a long-lasting economic benefit that we were supposed to have gotten, or that we were promised. It just didn't happen. And I was in the middle of all that. I was going to be that yuppie. And I was. I had a business suit. I had a briefcase. I had a nice car. That was when the term yuppies came up, or was coined, so to speak. And I was right in the middle of that, and I saw it all crash. I mean, real estate developing, especially in Southern California, but especially in Southern California, just came to a crashing halt.
What year was that?
I would say about 1990. 91, 92.
Yeah.
I worked for a firm. The firm that I worked for, the CPA firm that I worked for, went out of business shortly thereafter, sometime in the early 90s, because 90% of their billings were from real estate developers, and those real estate developers couldn't pay anymore. So there was this tremendous instability in the American economy, and just because. I don't know. It just basically tells me that so much of what we believe is just hype and pretty much nonsense, and we get people to believe a lot of things that they shouldn't.
Well, that's marketing and getting people to buy stuff that they don't really need.
Yeah, that's precisely the problem. And
well, if you guys want to have another look at this, there's a Wikipedia page, Savings and Loan Crisis. If you guys want to look at more on this and go into more of the the background and everything, and that's where we came to when I was asking you about how does the deregulation now with this deregulating and everything with the cryptocurrencies, how do you see that? How's that going to work?
Well, most of the belief is that if you deregulate it, regulations, add extra cost to the cost of doing business. And so therefore, if you are capable of unshackling businesses, corporations, whatever it may be, businesses in general, from the yoke of regulations, they're going to have more money and more ability to go out and spend, or invest, and there's going to be a motivation for them. It's not much different than trickle down in economics. It's just another version of the same thing that Reagan and the Reagan administration tried to promote, the idea of trickle down economics. All these rich people are being shackled or being withheld from investing in America because your taxes are too high and your regulations are too onerous. Okay, well, the fact is that I don't think you can drive the cost of either one of those things so far down. You can't get rid of taxes to the point entirely, or get rid of regulations to the point that it makes up for the fact that the cost of labor in these third world developing nations is a fraction of what it is here in the United States. If you can pay somebody $3 a day, as opposed to, however much you pay here in the United States, where are you going to go? I mean, the reason that you've made all that profit is because of the capacity to be able to offshore your business and be able to go to countries that have no regulations or have fewer regulations or much lower than the United States, have fewer labor laws, and a whole lot less cheaper labor. Well, that's what motivates them to leave in the first place. It's not necessarily the onerous. I mean, if that was all that it took, then why isn't Germany just deregulating and cutting taxes everywhere? Why don't all the first world developed countries do the same thing? Why doesn't Japan do that and say, well, I want to do that. Sure, it sounds great to me. Everybody wants development. Everybody wants to have a growing economy. Everybody wants to have a higher standard of living. And so it becomes a race to the bottom, as it's been termed several times with some of the economists I've talked to in the past. He said all of these other first world nations are just saying, okay, that sounds great. It sounds so simple. We can sell this idea to anybody. It's very easy to market. to our plebiscite, to our constituency. Let's go out there and do that. Well, that's just simply not going to work. It's shown right here back in the 80s. If it's any sort of harbinger, the 80s didn't have any sort of long-term growth. Because if all of this was supposed to have happened just 30 years ago, shouldn't we be seeing the echoes of that as well?
Yeah.
Shouldn't we be seeing a stronger economy? Because we already did that. Now, the reason I bring this all up is because cryptocurrencies are supposed to be an alternative to all of this that I'm talking about. Cryptocurrencies are supposed to be somehow an alternative. If I understand the thinking and the conceptual understanding of the conceptual premise of cryptocurrencies, it's an alternative away from banks and the Federal Reserve and the monetary and fiscal policies of the United States. It's supposed to be able to say we work in a different way. We value things differently. So put your money here, and it's going to be a safe haven. Just as what a currency is supposed to be. It's supposed to be a safe haven. It's supposed to be stable and predictable, and a place that you can put your money in, whatever denomination it is, whatever it is, lira, dollars, or the Deutschmark, and be able to put it in here. And when you want it, it's there, and it's there at the same value that you put it in.
Yeah,
that's what a currency. That's what a stable currency is to look like. That's what it. Those are the hallmarks of a currency that is from a country that has its act together. Well, that's not what's happening with cryptocurrency. I mean, as we're seeing now, it's all over the damn place. And I have to understand, and we have to be able to get a better understanding, all of us, as to why that's happening, why that's taking place.
Yeah. Absolutely. And that's why we're bringing this show to people every day is to give more information on what this whole new world about cryptocurrency, Bitcoins, deregulation, blockchains. There's a lot of new words that are flying around that have a totally different meaning now.
Yeah.
And, like everything else, we all want to know about the entertainment part of this. What's Hollywood got to say? And I went over to a site called CoinDesk, and they had an article. This was in May. When was this? I can't really see what the date on this is. But going through some of these names, one is Roseanne Barr. Roseanne Barr, actress, comedian Roseanne Barr, made famous by her sitcom, who has since run for president, among other political involvements, began publicly backing Bitcoin. She said, hey all, let's really understand Bitcoin. It might be better than removing the Federal Reserve and faster way to end satanic ritual rule. This was Roseanne Barr back in January of 2014.
Okay.
Drew Carey, actor, comedian Drew Carey, tweeted about Bitcoin's, this is 2013, so this gently encouraged wider Bitcoin adoption in at least the food and beverage industry. Just tried to buy breakfast with Bitcoins, was refused. What an idiot that person feels like today when they could have had.
I got to tell you something. I mean, nothing against Roseanne Barr or Drew Carey. I don't know. I don't know them personally, and I don't really care to know them personally. The point is, am I going to get economic advice from those two? I mean, not
No.
that they don't have anything to say.
Not at all.
But this is the point about Bitcoin. I mean, when I start to see comedians and actresses beginning to tell me something about this currency, or anything at all, I should be afraid. I mean, it's funny. I think we give these people, again, we're ranging afar from cryptocurrencies, I suppose, but I think we're giving these people a lot more credit, celebrities a lot more credit than they deserve.
Oh, absolutely. Yeah, they're idiots.
And I go back to, you and I don't know, we talk about this all the time, about the sort of situation, well, not the sort of the situation that's taking place in Hollywood with Harvey Weinstein, all the revelations of really ghastly behavior by the people who run this business.
Oh, yeah.
And I keep thinking to myself, wait a minute, we've had all these people who've taken on this role, especially women, but men as well, who've taken on the role of being these the conscience, the political and social conscience of Hollywood and the nation themselves. I'm talking about, Jane Fonda, Susan Sarandon, who can't seem to keep her, her top inside her dress, and Meryl Streep. Okay, great. If that's, and I'm not saying that a lot of the things that they're saying aren't worthy of understanding or that they don't have a point. But my question is, well, wait a minute. How come you never mention anything about the stuff that was going on in your own business? How come you never mentioned, the criminality and all of the injustice that was taking place, with the people that you dealt with?
They must have known.
And it was just the remark. I guess your conscience ends when your paycheck begins. And I just am always very leery of anybody who has celebrity that tries to, leverage that celebrity to become some sort of, some political voice. And again, that's unfortunate because we cannot separate the actor or the actress and the fact that they're, playing roles from what they're doing. I mean, from everything else in their life. And that might be the reason that celebrity is such a dangerous thing.
Yeah. Well, here we are, I'm looking at another site here, actually on time.com, their money section. Ashton Kutcher has already made his mark as an actor in everything from that 70s show to Netflix, The Ranch, but he's also become a formidable technology investor with his venture capital firm, A-Grade Investments, which has funded Uber and Airbnb, among others. At a TechCrunch conference several years ago, Kutcher spoke glowingly of the decentralized technology that Bitcoin that makes Bitcoin possible. The notion that we could civically monitor each other in an anonymous way actually keeps the anonymity of the internet. We don't have to worry about Big Brother, he said, at that same and that same infrastructure that built out Bitcoin could be used in the security industry for mass good.
Oh gosh, nothing against Ashton Kutcher, but I'm not sure I can agree with that statement at all. These are math algorithms, and the people who control this technology control the mathematics or the mechanics of how these transactions take place. Who are the people who control those transactions? Who invented this technology? And again, I don't know who they are.
I don't either. I don't either.
Yeah. So to
anybody out there knows, put it in the description below. Put it in your comments below. Let us know who started this.
Yeah, let me tell somebody. Let's just do this disclaimer. Look, you and I are trying to figure this out. We're just two, average Joes that are, friends and have been trying to figure things out for a long time. You came across this, and you told me that I should start paying closer attention to this technology, and so I'm a novice at this as well. But I've lived long enough to understand that there are fundamental things fundamental economic and financial principles that have to be maintained no matter what it is. And what I learned a long time ago is if you can't understand an investment, don't get involved. If you can't understand how things work, if they're asking you or you're contemplating putting your money into some sort of vehicle, you got to know how that vehicle works, how that investment actually functions.
Well, somebody that I just come across here, and I'm going to have to put my belief in this because he's known for his great sense of economic wealth, and obviously has his finger on the pulse of the economy. Mike Tyson. Mike Tyson, a fellow boxing star with his own demons, who was once convicted of rape, has been trying to cash in on Bitcoin lately. His company, Mike Tyson Bitcoin, yes, that's what it's called, offers a Bitcoin ATM and more recently wallets to store and trade the cryptocurrency. In a few years from now, Bitcoin and other digital currencies are going to be part of normal, be a normal part of our monetary system, Tyson said in a statement for the app.
Hey, guess what? When you just told me this, I remember Ed McMahon talking about, being the shill for, what was it? Sweepstakes, whatever, the Publishers Sweepstakes.
Yeah, Publishers Clearinghouse.
Well, Publishers Clearinghouse, whatever it was. And, I mean, what did this guy know about publishing or any of the things that he was hawking? He didn't know a damn thing, I'm sure. And yet, I'm sure that I know that I had a girlfriend at the time who said, I'm going to get involved in this because I know I'm going to win. I had time and again, I ran into people who were normal people. It's like when you go to an office Christmas party and, the accountant down the hall in the cube all of a sudden ends up putting a lampshade and thinks that, they're Deborah Harry or whatever. And that's kind of the same thing here. It's just, when do you start using celebrity like this? I mean, when do you, let's say, for instance, you want to get involved in a pension plan or a 401k, and Mike Tyson comes to your door and tries to pitch this to you, or anybody else like Ashton Kutcher, would you sit there and say, hey, you know what, since Ashton Kutcher, Roseanne Barr and Drew Carey have told me that this is a good 401k plan, I'm going to get involved. Who would be that? Well, I guess I can't say that. I mean, there are going to be people that are going to fall for it, but you shouldn't, because you don't understand it. So instead of trading on real knowledge, you're trading on celebrity.
Yeah.
And that's the whole thing that I keep trying to talk about. It's the hype and the celebrity to cover up the smokescreen of the actual mechanics of how these things work. And as it turns out, they're mostly voodoo economics, as George Bush Sr. said. And what I'm afraid of, and somebody's going to have to tell me and prove to me that cryptocurrencies are not voodoo. They're not part of the voodoo economics that are going to, get us to believe something that's not true. That's the thing I'm fearing. But then again, like you mentioned, a Canadian pension plan or pension fund is going to start looking into investing in cryptocurrency.
I feel like we're Hannity and Combs on this. I feel like I'm kind of for it. You're a little bit for it, but I think you're mostly against it.
Yep.
In a because you're a lot smarter than I am.
No, it's not that. It's not.
I think that because I want to believe. I think that the thing is, like, I want to believe this is going to make me rich and this is going to carry me into my 90s. Living on a beach, drinking drinks with a little umbrella in them, and that's what I want to do.
I want to believe that I'm Hugh Hefner's long-lost son that's going to inherit the mansion and the inventory Playmates. I like to believe that, too. But, you and I have grown up, because we're Americans. We've grown up, we've been imbued, and from the time we were born, we're watching a whole lot of things that just turn out not to be true. I mean, it's like watching and planning your life based on the commercials you watch.
Yeah.
But if you actually get a diamond for this, for whoever this woman is, that she's going to love you forever. Well, I can tell you, I think you and I can pretty much attest to the fact that ain't true.
No.
So, at some point we all have to get away from that. We got to start, growing up a little bit and realizing, hey, we're in this by ourselves. We got to start trusting our own judgment. But anyway, it's time to wrap this up for me.
Yeah. All right. Well, like I said, it's always a wonderful to find out all these things that are happening in the world of crypto. And I think that, I hope that's why people are going to start watching this show or listening to it, is that we're coming from an unbiased place on this. And, just like everybody else out there who just got into it like we did, they want to know more about what's going on. So I think it's fun to uncover these things and to talk about it, especially with somebody who has a better background in finance than I do, and kind of understand some of what, the economics of what's going to happen. But anyway, soon to come up in the next couple of days, we're going to be doing this again. If you guys have any questions about what we do, please put them in the comments below. Charlie, hope to have you.
As usual, Dean.
What?
It's been a great, highlight of my day. So I will talk to you real soon.
Yeah, let's keep it going, man. All right. So for Crypto the Wonder Show, WonderDog Show, Crypto the Wonder Dog Show, I'm Dean and Charlie, and we'll see you next time.
And remember, don't get drunk.